In the 19th century, the United States economy overtook the United Kingdom as the world's largest economy. Ever since, the United States has towered over the rest of the world as it possessed the most influential currency, the largest military power, the wealthiest population. But over the last 20 years, we've seen other economies catch up to the US, with China's economy now standing at $18 trillion. Many people believe this trend is going to continue or even get worse as the US empire begins to break down over the coming decades, and for economies like China and India to become the new apex predators of the global economy. And that's a fair question. The United States makes up around a quarter of the global economy today, and so each little up and down in the US economy makes a massive impact on the rest of the world. The US stock market represents around 50% of the total market capitalization of the global stock market, so not only does it have the most influence in the real economy, but also in the financial markets. If the US were to get taken over by other economies in the coming decades, it could be that the US goes from being this influential giant to becoming less and less relevant, just like the UK did in the 1900s. And we're already seeing signs of this happening, as China has already taken over the United States as the world's largest economy by purchasing power parity, standing at $23.4 trillion in GDP. Purchasing power parity is when we adjust GDP for the cost of living within the country. Now, a lot of this can be attributed to the massive population growth that China experienced between 1950, where its population was around 500 million people, around 50% larger than the United States, all the way to 1.4 billion people. And this also coincided with a massive boom in manufacturing in China, as this huge population could produce goods for the rest of the world at a cheap price, which is another driving factor why the manufacturing economy in the United States has been completely wiped out, and one of the big reasons why the Chinese economy was able to catch up so quickly to the United States over the last 40 years. Being the rest of the world's manufacturer is actually also what asserted the United States as the world's dominant economy after World War II. This manufacturing boom continued to strengthen until 1978. Right here is when Deng Xiaoping, the leader of the People's Republic of China at the time, announced what he called an open-door policy, opening the door to foreign businesses wanting to expand their operations in China, which led to a 40-year decline in U.S. manufacturing. This transfer of manufacturing activity made China what it is today, but it also probably made the two U.S. recessions in 1999 and 2008 much worse, as businesses laid off American workers and transferred their production to China to cut their costs, which completely stunted U.S. economic growth while accelerating China's economic growth and allowing the Chinese to become richer. GDP per capita back in 1999 was a mere $2,000. Today it stands at $12,000. That means the average Chinese income went up sixfold in just 20 years. But that's still much below the United States GDP per capita that currently stands at $63,000. Now imagine the Chinese GDP per capita were to increase to $18,000. Americans would still be around 3 times as wealthy as the average Chinese, but this would make the Chinese GDP stand at around $25 trillion. That would look something like this, and depending on how quickly the US economy grows over the next few years, it could mean that China becomes a larger economy than the United States, which seems like a pretty likely scenario given that the Chinese population still has a lot of room to get wealthier. But just because China is the largest economy doesn't necessarily mean that it's going to be thriving and dominating the world. In fact, just like its population boom led to its rise, a declining population could lead to China's demise, as we've likely already seen China's population reach its peak and will likely be moving down violently over the coming decades, according to many projections. Japan experienced something just like this in the 1990s. A huge population boom made the GDP soar from $500 billion in the 1970s to $5 trillion in the 1990s. Then in 1989, the Japanese stock market bubble popped, which was followed by 3 decades of the Japanese economy along with a stagnating population. And as Japan's population continues to decline, the economy seems to just keep on contracting. So not only does China face the same economic headwinds of a declining population, but also the headwind of the population getting richer. If China's GDP grows to surpass the US GDP, it means Chinese people are getting richer. So the cost of manufacturing in China is going to rise, and that's going to make China have a more difficult time attracting businesses. Now, that's not a problem that the United States economy will have in the future because it already saw its manufacturing economy get completely destroyed over the last 40 years. Nobody relies on the US for cheap manufacturing. In fact, the manufacturing economy now only represents 17% of the US economy. 77% of the US economy comes from services, and a significant portion of these services are in the technology sector. Technology industries, whether that's software, AI, data mining, crypto, many of these are seeing rapid growth and will continue to over the coming decades, and the United States is by far the global leader of this industry. The market cap of the US technology sector makes up around 80% of the world's total technology company market. So they are in a significantly better position to benefit from technological progress and innovation than any other nation. This is why we have the technology ETF RSPT in our weekly asset ratings. If you're a member on the website, you can expect an update on it this week. We are getting close to upgrading our rating to a buy. If you're not a member, make sure to use the discount we're doing today to access our investment strategy. Now, to be fair, China has been investing a lot in research and development over the last couple of decades. This is a chart showing total investments, private and public, in research and development towards innovation in China. It has gone from pretty much nothing in the early 2000s to nearly $1 trillion of investments on research and development per year. It has taken both Europe and Japan by quite a large margin and has been quickly catching up to the United States. So if China plays its cards well, it could transition towards an economy that benefits from growing industries instead of just a population boom. But manufacturing in China today makes up 40% of the Chinese economy. So they still have a lot of work to do in terms of transitioning their economy from manufacturing that could face many headwinds as the Chinese population becomes wealthier, increasing the cost of production in China, towards services. And it could take time for that shift to actually happen, which is the argument to say that China will likely overtake the United States as the world's largest economy, but could face considerable headwinds in the next few decades. Meanwhile, the United States could continue to see a relatively steady growth trajectory as its population continues to grow steadily and people are working in industries that are actually growing. But it's not all blue skies for the United States either. U.S. public debt has now reached 120% of GDP. That's considerably higher than most developed nations. Italy and Japan have higher public debt levels than the United States, but these are not exactly thriving economies that are battling for the number one spot. China, for example, looks a little bit healthier than the United States, with its debt being 80% of China's GDP. More debt typically means less growth because politicians raise taxes and cut government spending in order to avoid a debt crisis. This typically leads to lower economic growth in the long term. And many projections suggest that the U.S. debt load will continue to rise substantially in the next couple of decades, which would put further downwards pressure on the American economy. So the debt burden in the United States could be one of the decisive factors for whether the U.S. economy thrives in the coming decades as it benefits from rapidly growing industries, or whether it struggles as Americans are suffocated by the government's debts, allowing other economies to catch up and outgrow the United States, like China and India, that has already been closing its gap with the United States since 2000 and could be ready to see a similar growth trajectory to what China experienced between 1990 and 2012 over the next 20 years, because India's population has been growing incredibly quickly over the last few decades, and it is poised to overtake China's population just over the next few years as we see China's population grind to a complete halt, but India's population continuing to grow very quickly and likely not peak until 2060, according to the Pew Research Center. And India's economic growth looks a lot more sustainable as well, with 60% of India's GDP being composed of services and a mere 27% from manufacturing. So India's economy isn't entirely based on cheap manufacturing. Additionally, India's GDP per capita is a mere $2,200. So the average Indian income has a huge amount of room to catch up towards an economy like China. This makes India a prime candidate to potentially catch up to both the United States and China in the coming decades if India follows the same growth trajectory that China had between 1990 and 2010. We could see India become the world's largest economy in 20 years' time. Of course, 20 years is a long time, a lot of things can happen, and India also has a lot of work to do when it comes to increasing its population's education level, that for now is still substantially lower than most other emerging economies. India's education index is still below 0.6, which is below the level of education in Iraq, in El Salvador, Zimbabwe, Ghana. If India wants to rise to become the world's dominant economy over the next 20 years, it will need to dramatically increase its investments in education, research, and development.